What is up, everybody? Spencer Israel here. We got a lot to talk about right now on futures trading with NinjaTrader. I got Jim Cagnina here. We got to talk stocks. We got to talk interest rates. We got to talk bonds, commodities. This is the Futures Show. If you have any questions about how to trade futures, what are futures, what are we even doing here, drop it into the chat. Go right ahead and smash that like while you're there. And here we go. This is futures trading with NinjaTrader starting right now. All right, I've got Jim Cagnina with me here, Senior Education and Training Specialist for the NinjaTrader platform. Jim, how we doing?
Pretty good, Spencer. Pretty good. Glad to see you. How are you?
Doing okay. I was just watching the market there. We had a turn. We just made a new high of the day, but it was so short-lived, and we're just like that back down near the lows of the day, at least in the S&P 500. So let's talk about that right now. If you can you share your charts, please?
Yes, sir.
We'll bring those up on the screen, and let's just run through the major markets today and where things stand, coming off of a pretty brutal week last week, right, Jim?
Oh my goodness, yeah. I mean, we have let's take a look at the S&P 500 first. I mean, here's the sell-off, right? We had that kind of weird rally. This is kind of early in the war. March 15th, and we had this big rally. Institutional investors, in my opinion, got involved, brought us back up. We retraced nicely down from a fib line point of view, and then kept going. And right now we're digging down, and we're going to be hitting rock bottom pretty soon, and probably still be digging. It's been a big sell-off.
Yeah, across the board too.
Yeah, so even this short-term area right here of what I thought would be, maybe support around 43.83 in the S&P didn't hold. It couldn't hold.
Nope.
And wow, look at Friday. That is a dominant candle, and you can just kind of see how big it is. It's huge. It's humongous. It's 150 points, give or take, high to low. So there was no buying at all on Friday. And then we tried to fight back earlier today, but couldn't do it. I suspect some of this has to do with some of the supposed alleged press statements being made about China and COVID restrictions and testing.
It's possible.
Yeah, I don't know for sure, but that kind of time. The timing was the same because it was odd, yeah. Spencer. The headline was, "Hey, we're going to release this information at 10 p.m. Shanghai time, which is East Coast. It's 12 hours ahead." Who releases news at 10 p.m.?
I mean, 10 p.m. for us is right in the middle of the day in China, isn't it? So
it's 12 hours, right? So anyway, you got this. We have a new Fed fund target. We have all sorts of stuff that's contributing to the decline, at least for now. And again, I don't see it. I see these wicks down here at 40.93, give or take, and at 41.28 is targets now. I think we're in bear mode now, for sure, officially, and that's where we're headed.
I mean, the bottom line is the path of least resistance is lower, right? And you're a big trend following guy, right, Jim? So right now the trend is down, and the trend is down in everything, and that's sort of why you're thinking that we can keep going down, right?
Yeah, for sure. And also, a lot of times these kind of bottoms, they attract kind of like your porch light and a moth. They attract attention a lot of times. And so that's why I have these things. That's why I have an ellipse around them, these two prices. And it's crazy. I've seen it happen so many times in my life that I'm bearish here, man. I am bearish here.
What about other markets?
Yeah, so systematically, all of the stock index futures are the same systematically. NASDAQ, is probably the closest to that bottom target. In other words, they're the weakest. Although today we have somewhat of a doji kind of formation coming up. So today it was weird for NASDAQ. It's a little stronger than the other stock index futures, but generally it's pretty weak right now. And, the conventional wisdom is, hey, because these companies, these so-called tech stack companies, are more sensitive to interest rate changes. That's kind of the prevailing wisdom. Russell 2000 is also looking just as bad as the NASDAQ. Target 1878. I think it's really doable and reachable, maybe even this week, Spencer. I hate to say it.
Oh,
so I'm bearish there. Dow is the strongest. I know you can't really, doesn't look like that from this chart, but it's the strongest of all of them. We're still above that 23.6%, even though we have a lot of continuation selling coming in today, right now. And the target's a lot further away, my low wick. So it's the strongest, and it should be, right? This is, these are giant, big international necessities, right, in life. So that's that's where they are structurally. They're all pretty negative. Yeah.
I mean, Jim, like you said, it's hard to see when you're looking at the chart, but if you can be stacking them up against each other, I mean, yeah, the Dow Jones has been your leader. It's only down like 9% for the year, only, and that's your leader of the bunch. So, and there are some stocks within it that are down way more than that, of course. Like Salesforce is down like 25% this year, but by and large, the Dow Jones has been your flight to safety. It's just that it hasn't been that safe either. It's just
yeah, and so you can see my rectangle here. This was kind of my longer term area of support, and Friday broke the camel's back there, and we have continuation selling. I do expect though a relatively rapid retracement back up at some point. So I'm not saying this is going to zero, because I think there's going to be a bottom. I think there's going to be institutional investors saying, all right, these are bargains right now, looking at a 1 year, 2 year, 3 year window. And so buyers are going to come back in. I just don't see it happening today.
Okay, let's move away from stocks here for a second.
Okay.
Yeah. Okay. So gold, man, why isn't gold higher, Jim? I don't understand this.
I know you think in terms of, risk off, gold would be higher for sure. And I'm perplexed as much as you are. Not only are we off the highs by a lot, we're down to that 61.8% retracement. That's the magic level where trend changes, in my opinion, right? So if we close below this number, I'm going to say I'm bearish on gold. We're out of my my channel that I thought was kind of price happiness for a long period of time, around 1934-ish, up in that channel. And we broke on down for sure. So sellers have control here, series of higher lows, lower highs, lower lows. And it's looking pretty negative. I agree with you. I'm a little bit scratching my head on why this is the case. Now look at that wick though. This little wick I had circled, just got attacked. It happens. You get these little low dangling wicks. I call them icicle wicks. And eventually you get to it. So we'll see if that holds or not. This is an interesting pattern.
Now that where are we? We're below that now. So what's the next level of support there?
Well, I don't know. I mean, there isn't one. I mean, this old trend line. There isn't one. I mean, this old trend line is really old, but again, my long-term target is 1860, and that's still within play here. We're getting close, but still pretty far away.
Okay, man, I really would have expected more out of you, gold, but I guess I shouldn't if history is any guide, at least the last decade and a half or so. Let's move away from gold. Crude oil.
Crude oil, again, is behaving in a manner which is a little bit perplexing, but sellers are coming in strong. We're below $100 on WTI crude. I have a trend line right there at 93.60, give or take. That's a really nice target. It corresponds with a double low here, a double bottom at 92. I'm going to call it 92.13 here's the second bottom, 92.36. We'll see if that holds. If not, I'm officially going to be bearish in crude oil as well. There's a lot of different opinions on where we're going to finally hit equilibrium. With China now in the mix with this COVID situation, all bets are out the window. But right now, it's holding its own. Right now, there's about 227 more rigs online, according to Baker Hughes's rig count in the U.S. from Friday, year on year. That's a lot. So there could be anticipation of more production hitting the streets.
Yeah. All right, what else we got here, Jim?
So natural gas. Remember we talked about natural gas yesterday?
Yeah, last week.
Last week, I'm sorry. We finally, sellers said enough. It was after we broadcast, me and you. They were like, all right, did you hear what Jim and Spencer said? That's enough. This rally is over. And sellers came in enforceably, right? We went from the top, we went from a peak to a 50% retracement almost within a matter of 5 days. So that was a real big relief for the natural gas futures market. I know we're in the spring, demand's going to be less. It's a little bit of a different equation, but this is very interesting. It was a really huge sell-off.
Wow. You've seen. So the question that I was asking last week was like, what is next? Because natty gas is just the latest commodity to go parabolic and then come off like just like that. I mean, so I guess the question is, assuming that move is sort of washed out now, is what's the next commodity? Because we've seen lumber, we've seen wheat, we've seen natty gas. I'm sure I'm missing a few.
Yes.
All these commodities have just gone parabolic and made these short-lived moves. Have any of them not done that? Because maybe we should buy those.
These are cyclical markets, and some of them are seasonal. Well, some of them are not, and they are cyclical. So when you jump over to like copper as an example,
Okay.
Copper's a really good market on how price appreciation or depreciation doesn't last forever. Right at the bottom of my triangle here, let's just go all the way back to March 1st. We had a huge rally in copper, and everyone feared the worst, right? Because of, we need it, construction, electronics. You can see my little notes up there. It's a kind of important factor in the overall scheme of economic development in addition to just production. And then we kind of have a double bottom here as of the 15th, and then we went to a sideways channel, and then sellers just kind of took over. So again, it's we're in bear mode here in copper, and this is a good example, though. It's trending down, and I would not be interested in buying this market right now. I'm interested in selling short copper futures, but it's not going to last forever, right? It'll eventually cycle back up, and that's what these markets do.
I suppose so.
Yeah.
Do you want to move away from the commodities and look at interest rate sensitive markets?
Yeah, here's the 30-year bond. This is the one I track the most. We're in a bear channel down. Moving average, 20-day moving average cross is moving down. I had to keep moving my fib line lower and lower. Last couple of days, we had buyers come in, which it happens, right? When you have these cyclical kind of moves down, you have buyers come in. And again, this is totally a function of not only supply and demand, but also of what the FOMC is going to do. And the best way to look at that is tracking the Fed Funds, CME Group Fed Funds tool. So I'm going to move that in front of us.
Yeah.
And let's take a look at the matrix.
Hey, can you zoom in a little bit on that?
Maybe.
Yeah, I got it. I'll pull it up. I got you.
Okay. Thanks. I'm technically challenged over here. So literally, we have a scenario where we have a meeting coming up in, I don't know how many days, 9 days, 2 hours, 44 minutes, 44 seconds. And, this tool is based on real-time futures pricing, right? The Fed Funds is the monthly contract that's priced way out ahead of us. And there's an algorithm that the CME developed that said, hey, here's the probabilities of the rate hikes going forward. And for the May 4th, 95.4%, nearly 100%, probability that the Fed funds target rate is going to be moved by 50 basis points to 75 to 100 is their range, right? 0.75 to 1.0%, 75 to 100. The interesting thing, Spencer, that changed last week on Friday was this June, the very next meeting, 5 weeks later. Yeah, we have the probability shifted 75% that we're going to increase rates another 75 basis points to a target of 150 to 175. That was interesting. And that corresponded with that big sell-off on Friday.
So the Fed Funds futures market is not always right, but it does give us a hint as to what the market is thinking. So just to recap, market is saying there's basically going to be a half-point rate hike on May 4th. And then on June 15th, they're going to go another 0.75 points. And then in July, another 0.5 point. from there. So a half, 3/4, and a half is what the majority of the market is pricing in right now. Jim, this sort of fits in a little bit to your tip of the week, does it not? You want to go there?
Sure. Sure. Absolutely.
All right, I think this fits into what you were saying about that.
I know we're a little early here. In our segment on tip of the week, but number one, Federal Open Market Committee, FOMC. These guys and gals have primacy over everything else. The war, supply chain, COVID, inflation, whatever you want to call it. Tapering the balance sheet is part of their thing too. These guys, this is how the market is going to march to this drummer. So you got to be really sensitive to it. We're thinking maybe 300 basis points by the end of the year, which is probably a little more aggressive than most of the guys on TV think. And I'm thinking maybe 325. So this is, in my mind, when I read the news and I try to figure out what's my bias in the market, what's going to happen today or tomorrow, the first thing I'm focusing on is, are these guys talking today? Is there an action that's going to happen? What do the Fed funds tools show me? And that's going to set my tone.
Yeah. The Fed rules all, right? And as evidence of that, Jim, can you just pull up the S&P 500 futures or any stock, whatever, and just look at Friday afternoon, okay? Friday afternoon at like right before the close, right? It was
let me get there. Hang on, we can get there.
Yeah. There was a huge volume spike Friday, and I mean I'm talking about like the 4 p.m. close. It was at like 3:30, right, p.m. Eastern time. Yeah, or 3:45. Yeah, this huge volume spike, and that was because Loretta Mester was on CNBC, and she said, "Yeah, I don't think we need to go at three quarters of a point with the federal funds rate." She said that, and that turned the whole market on that comment. You can actually see a spike there in the price and even a larger spike in the volume. And that's just one throwaway comment at 3:45 on a Friday, right?
Yeah, exactly. And so the market that's a great example, Spencer. You're absolutely right. We're so sensitive to what these folks are saying. Remember, there's a dozen FOMC banks, regional banks, and there's FOMC committee members. They actually vote. This isn't like Chair Powell saying, I hereby declare we're doing this. There's like analysis done. There's people in the room with giant bats of coffee going back and forth for a long period of time. And they actually, Powell's job is to get consensus on what he wants to happen. Yeah. But, consensus means you got to have compromise.
Yeah. All right. Let's run through the rest of the markets. And then I want to save some time for questions from the chat.
Okay. So a couple other markets really in trend right now. I just want to point out a couple of the currency markets, the Euro FX versus the US dollar. Maybe you're trading it in over-the-counter Forex. You should be trading it in futures, by the way. A lot of benefits in futures over the counter. Don't have time for all of those benefits, but this is trending down. This is pretty negative. I'm pretty bearish here. And it's really simply an interest rate differential mostly between the two countries, right? You have what the Fed's going to do is projected here. What the ECB is going to do is projected there. And this is where money flows back and forth out of these two things. So they're slightly more dovish over in Europe. Maybe they have less worries about inflation. I don't know. But than it is in the US. And I think you're going to continue to see downward momentum here.
Okay.
So that's a big deal. We're almost at 1.07. And then following suit is the Japanese yen. This thing is in free fall from other than today. We fought back a little bit. We're in free fall from the beginning of March. Sellers. Japan's having their own problems, but this is one of our, look at this stat I have. More than 250 billion of goods and services are exchanged between the U.S. and Japan each year, providing a natural and liquid market for the yen futures. Yes, but again, this is just a cross. It's a yen versus U.S. dollar, which is inverse to what it is in the cash market. In the cash market, you're used to U.S. yen. Here we're yen U.S. just to keep it consistent. I know people don't like the decimal places, but you'll figure it out. We're right down here in this triangle here. We'll see what happens as we pinch toward the corner of that triangle. Seriously crazy. And then finally on currencies, you got dollar
there
index.
We go. I was just going to ask, is there any chart going up and to the right? Yes, there is one.
Yeah, nonstop. This is a very strong bull market. You could argue, well, this is a flight to quality, or you could argue, hey, we're going to have 3% Fed funds target by the end of the year. This is a better deal. So I don't know what's the right answer. Maybe a combination of the two, but I would not be selling this. I would be looking for places to buy this.
U.S. dollar index futures, which U.S. dollar index is an index. You can't buy that, but you can buy ETFs that are tied to it, or the futures that are tied to it, and that's your way of betting on the strength of the dollar over other global currencies. And it goes back to what I said this morning, which is like, it may not seem like it, but the U.S. is doing pretty good right now compared to the rest of the world, right? Even when it comes to inflation and just the performance of the stock market and the economy at large. I mean, the reality is things are far worse everywhere else. Things may not be great here, but they're certainly better than they are everywhere else. So
yeah, and the strong dollar, that's important. We buy more, we import more than we export, as opposed to some other countries. So it's another reason it's a big deal, I think.
Yeah.
In the U.S. dollar index, but we'll see. But really, here's this. Me and you want to talk about this. We want to talk about the Bitcoin futures.
Yeah.
Again, terrific market to sell short. If that's your opinion, if your opinion is going long, terrific market to buy. The futures markets are really give you that ability to express your opinion either way without any weird mumbo jumbo. And you pointed it out to me, Spencer, that this is kind of is directly related to NASDAQ futures. And you're right. They're highly correlated.
I know. It's the crypto market. I don't know what to say about it, because I own Bitcoin, but it just is not. It's just such a risk on asset that is it's frustrating, because I feel like people were sold on Bitcoin as this great hedge, and it really is not that in the short term. Which, okay, fine. I guess I'll have to wait till it turns again and goes back to 70 if it can ever get there. But I mean, we're under 40K right now in Bitcoin. Every $10,000 level, right? Psychological. So we're at 39 right now.
No, for sure. And there's some downside in this chart. I mean, I don't want to be doom and gloom, but there'll be a point where we're back to risk on. Maybe not this calendar year. Maybe
doesn't feel like it. Doesn't feel like it, Jim.
We will be. I mean, I'm old enough to know. I'm way older than you. I've seen it.
I don't know. Of course it'll turn.
Times.
Of course it'll turn. It doesn't feel like it. It's been. The reality is really since really January or February of last year. So we're on month like 15 of a down market, right? So,
I know. But we'll just keep our eye on it. And again, in the futures market, you could participate. You can go short. You can go long.
That's true.
You could trade it. So just be careful. The volume's a little small, but it's okay. It's tradable. One other new thing I wanted to share, if I have time, Spencer, can I?
Yeah.
I want to share another chart.
Yeah. What do we got?
So I'm just going to pull up a 10-minute chart, and the CME launched a new product, and it's super cool.
What is this?
These are basically micro notes and bond futures, right? And what we're seeing right here, it's a micro 10-year yield futures. And so remember, price and yield are inversely related. On TV, all you see is yield. You don't see price. Futures traders are used to price, but now you can trade the yield, inversely related. And so they launched these micro yield products. They're brand new, but I'm really excited about them. And it just kind of tracks the yield of whatever. Let me tell you ones I have over here on my quote board: 30-year yield, 10-year yield, 5-year notes, and 2-year notes. The chart here is a 10-year yield micro contract, and it's actually genius, because now we can think in terms of yield as well when we trade. If you think yield's going to go up, you could buy this contract. If you think yield's going to go down, you could sell this contract. Brand new, but I have high hopes for it.
That's cool. Have you used it at all?
Not yet. I mean, literally, you can see I got 4 days of data up here.
Yeah.
And if you look at the volume is still in its infancy, but
What are the symbols here?
So the symbol here on the future side is you start with the number. So 10-year, it would be 10 YR and this is for the 10-year note. 30-year would be 30 YR. It's a monthly contract. This one's going to expire pretty soon, and then it'll be the May contract next. But that's okay. NinjaTrader, you could have a continuous chart, and you can see the continuous data. It could be something. I'm excited to see it, and it's a smaller size contract, so it's $1, a tenth of a basis point.
Nice. All right, I didn't know about this until you just mentioned this. So we have a market that will actually let you trade yield and not price. So you can always trade yield by doing by trading the inverse, which is the price, but now you can actually trade the yield.
Right, exactly. And so for a lot of traders who aren't used to futures, have a hard time mentally making that transition. And I don't blame them. I don't blame them at all. And now that with these new products, I think it'll actually be very helpful.
Nice. Very cool. Very cool. All right. Here's an interesting question from Paul C. Assuming the Fed does raise rates a half point, that's what the market is saying right now. So let's just assume that happens. Which yield would rise the most, or yield curve, the 10 versus the 5, the 5 versus the 10, or is there like which spread would increase the most? I'll be honest with you, Paul C. and Jim, and I know everyone. I am by no means a bond market expert. So Jim, I would defer this to you.
Well, thanks. I'm not either, but I suspect this idea of inverted yield curves where the smaller durations are out of whack, right? Those yields are higher than the longer term durations, at least in relation to each other. I think that phenomenon is going to become more and more of a thing as the Fed is aggressive in these rate hikes. So I would expect to see the 2-year note moving disproportionately more than the 30-year. I think it's going to be the short end. To answer the question, I think it's going to be the shorter end of the curve.
Okay. And then John Doe, if you see the VIX dropping below 30-ish, start buying before. I don't really actually understand that comment, John does. So
VIX is so. I have it up here on the right-hand part of my screen. I have the VIX up here. It's up to about 239 today. It's over 30, right? Yeah. And in my mind, I have tiers in my mind. I have 25 and higher, 30 and higher, and 35 and higher. Again, it's been commonly referred to as the fear index, right? And you see these correlations when we're in the 30s where these markets are just, breaking down, right? So it's very important. I'm not sure what the question is either, but it's very important to keep an eye on that because it's kind of like an additional piece of economic indicator, right? It gives us that sense that, hey, when this volatility index is up, the bias is going to be negative on the downside. And I guess I should show a daily chart to kind of show that a little bit in better perspective. But that's a very good observation and something we want to keep our eye on is what the VIX is doing.
Hey, Jim, level 2 trading in the chat. I guess he's referring to the new bond futures tool. So it reminds him of when you first saw the 6E contract on the dollar yen cross. I think it's what he's referring to. Anyway, we're at time. Jim Cagnina from NinjaTrader. Jim, any final thoughts for us? Any calls to action? Where can we go to find more? What do you have upcoming this week?
So go to the ninjatrader.com/events page. Every morning, 9-10, for about an hour and a half, we look for trade ideas. We explore all of these different kind of markets and try to get involved with some trades. Yeah. Same thing at 3:15 in the afternoon at the close every day. That's Monday through Friday. And so that events page will have all that stuff in there. And you could participate easy. You could do Zoom. You could do YouTube, you could do Facebook, whatever you want. It's really easy, anonymous, it's free. You could ask questions. It's a lot of fun.
Nice. All right, Jim, we'll talk to you again next Monday. Guys, check out NinjaTrader. If you are interested in trading futures, there is no platform better. And Jim, Cagnina, we'll see you next Monday for our next show. Everyone, we're going live right now over to Benzinga Live. First time we're doing this show at full strength since last Monday. Aaron Bree back in the saddle, ready to roll over here. I'll catch you guys over there. Have a good one. Smash the like. Stay green.